FHA is a little different from conventional. That FHA can go lower on scores, or it caters more to a lower score borrower, and you can still do a minimum down payment and buy a home. One of the things that people think is that you need like a 620 credit score or even a 580 credit score, and in a lot of cases you do. But in one, I've got one bank that I broker to right now that they will go down to a 550 credit score, and you can still put down the minimum of 3.5% down payment. So that's pretty competitive. Not a lot of banks are doing that. I happen to be brokered with one to do that. Now it's a manual underwrite. So what that means is that they're going to look at your credit, and if your score is low, what they're looking for is somebody who's maybe had problems with their credit in the past. They're rebuilding their credit. Maybe it's been clean for like the last 12 months. You've got good employment history. You make good income. That none of that is an issue, and you may have even some alternative credit lines like utility bills or various things that you can show that you've made on time payments. Having money in the bank helps. Having what's called reserves helps as well. So, those are things that can be done to help you, even if you do have a low score, because, life happens, man. I mean, you go through divorce or you go through medical things, and, maybe you're at a loss for income, you get in trouble and it hurts your scores. Sometimes just one late payment, if it's very recent, can really have a big impact on dropping your credit. So, just if you are in that boat and you think that your score is too low, I would still try to run it, and get an opportunity to see where your scores come in at. Another misconception people have is on like if you're self-employed, that you're going to need 2 years tax returns to support your income. In most cases, you do. In most cases you do, but I do have a bank that I broker to specifically on FHA loans that will allow for a self-prepared profit and loss statement from that business owner, as long as you've been in business for at least 2 years. That's the key. They want to see that you've sustained the business for at least 2 years, because statistically speaking, the likelihood of businesses failing within the first 2 years is very high. So once you've made it past that 24-month threshold, that's what banks like to see. In this one in particular, like I said, instead of tax returns using that to support your income, you could do a self-prepared profit and loss statement. So that's pretty big. Don't think that because you're self-employed and you don't show a lot of income on your tax returns, which most self-employed buyers do not. There aren't alternative programs out there for you. There's bank statement programs, profit and loss statement programs, but this one happens to be an FHA loan that you could get on the origination, and then you could refinance and do an FHA streamline to a lower rate at a lower time.